Welcome to the Explainer. Have you ever jumped into a trade feeling totally confident that this is the one, only to watch it turn around and stop you out almost instantly? Yeah, it's one of the most maddening things in trading. Well, today we're going to dig into exactly why that happens, and more importantly, how you can flip that frustration into your greatest trading edge. So here's the game plan. We're going to solve the pullback puzzle. We'll learn the critical difference between a simple pullback and a devastating reversal. I'll show you the signs to look for, how to use volume as a lie detector, and then we'll put it all together into a practical trading plan. And finally, we'll talk about a trader's secret weapon, patience. All right, let's just jump right in and talk about something that I know drives a lot of traders absolutely crazy. Oh man, that feeling, it's just brutal. You see the perfect setup, you place your trade, you're excited, and then bam, the price immediately goes the other way and hits your stop loss. It almost feels like the market is personally out to get you, right? Well, there's a really simple reason this happens, and it's because markets almost never move in a straight line. They have a rhythm. They move up, they take a little break, they move down, they catch their breath, they ebb and they flow. And these little breaks, they're called pullbacks. Think of it like the market just taking a quick breather before continuing on its way. It's a totally natural, totally healthy part of any trend. And once you learn to spot them, they become a huge opportunity. And here's what that looks like on a chart. In a nice, healthy uptrend, you see higher highs and then higher lows. That little dip to form the higher low, that's your pullback. That's not a red flag to sell, that's actually your golden ticket to get in on the trend at a much better price. Okay, so this brings us to the million-dollar question. How in the world do you tell the difference between a harmless little pullback and a full-blown account-destroying trend reversal? This is where so many traders get tripped up. Getting these two mixed up is probably one of the most expensive mistakes you can make. See, a pullback is just a pause, and look closely here. It usually happens on lower, weaker volume. A reversal, though, that's a whole different animal. It's a major shift in direction, and it's usually powered by a huge surge in volume. It's decisive. And this chart just shows it perfectly. See how the pullbacks kind of bounce along the trend line? It respects the overall trend. But that reversal, whoosh, it just slices right through that support, smashing the old trend to pieces and starting a brand new one. Okay, so let's get practical. Let's talk about the actual tools you can have in your toolkit to spot when a pullback is probably running out of steam and the main trend is getting ready to take over again. Look, no professional trader is ever relying on just one signal. It's just not going to cut it. They build a case for their trade. They look for what's called confluence, where a few different tools all start pointing to the same conclusion. So let's look at some of the best ones. Moving averages are absolutely essential. And you shouldn't think of them as just wiggly lines on a chart. Think of them as dynamic, moving areas of support and resistance. In a really strong uptrend, for instance, you'll often see the price pull back to that 20 or 50 period moving average and just bounce right off it as new buyers pile in. Fibonacci levels are another really cool tool. They help us make an educated guess about where a pullback might end. On this chart, you see a big move down, and then where does it pull back to? Right to that 50% level. That's a classic spot where traders who miss the first move are just waiting to jump in and drive it lower. All right, now for my favorite part, let's talk about what is arguably the most powerful confirmation tool there is, because it tells you what the big players are really thinking. I'm talking about trading volume. You gotta think of volume as the market's truth serum. It tells you how much conviction is behind a move. So if you see a pullback happening on really low, fading volume, it suggests nobody's really buying into it. It's a weak, half-hearted move, not a real change of heart. And this slide just nails the difference. A weak pullback just fizzles out on dying volume, right? But a real reversal, that hits like a tidal wave. You see a massive spike in volume and momentum. That's the market screaming at you that something fundamental has changed. Okay, so enough theory, let's make this super actionable. We're going to put everything we just talked about into a simple 4-step framework that you can use to execute your trades like a pro. A disciplined process is everything in trading. So, step 1, figure out the main trend. Step 2, wait. You patiently let the price pull back to a value area. Step 3, look for proof. A bullish candle, a bounce, a volume spike. And only then, step 4, you pull the trigger with your stop loss already planned. This process takes emotion out of the equation. All right, let's see how this works in the real world with a real stock. We'll use Apple as our example, based on the trade detailed in our source material. So check this out. First, the trend for Apple is obviously up, right? It's above the 50-day moving average. Next, the trader waits for the pullback, this dip right here, which brings the price back to that key moving average. Then they see the confirmation, a nice bounce signaling buyers are back in control. That's the green light to enter the trade, with a clear stop loss just below that recent low. Beautiful. So, before we call it a day, let's just boil all of this down into a few core principles that you can take with you. Look, if you remember anything from this, let it be this. Mastering pullback trading has nothing to do with finding some magical secret indicator. It's all about discipline. It's about having the patience to sit on your hands and wait for those A-plus setups, and always having a plan to manage your risk. And really, that's what it all comes down to. That one question separates the consistently profitable traders from, well, everybody else. And learning to truly understand pullbacks is your first giant leap toward becoming the kind of trader who waits for the market to come to them. We've really hoped this breakdown helps you look at the markets with a little more clarity, a better strategy, and a whole lot more confidence. Thanks for joining us for this explainer. This image is for illustrative purposes only. To gain a deeper and more structured understanding, join my community where you will have access to comprehensive materials and detailed guidance.